Burberry,
Yeah.
LVMH, Porsche, a Ferrari. I mean, they're hitting records in sales. They can't maintain they can't maintain the supply for the demand of their product. So I mean, to get more, I guess, into
Is
the
that a sign of
socioeconomic
disparity
nature
of
of it,
wealth?
yeah, of course it is.
Hey everyone, welcome to our latest Trade to Black podcast. I am your host, Shad Dales. Curaleaf makes some announcements earlier this week of their latest earnings. Wonder if Boris Jordan is relaxing a little bit, but how are the earnings? What's your response? Leave a comment below on what you think, what the overall earnings season has been like. We'd love to hear from you. And to learn more about this week's Curaleaf earnings reports, we're going to dive in it. So let's bring in our lead financial writer, Benjamin A. Smith. Good day. How was the week?
The week has been pretty good, guys. Cannabis is moving. Looking forward to talking about it.
Yeah. Anthony Verrill, millennial entrepreneur, host of obviously here at TDR. Good to see you, sir.
Good to see you as well. It's been a good week. I mean, it's nice to see the cannabis conversation taking shape again. Granted, even if it is a head fake, at least it's nice that we're seeing some breath
It's kind of
breathe back into the sector. It's good to see.
Isn't it? You know, we've been sitting here. It's been pretty slow for a number of months, but it is actually kind of nice to have some conversations. But one thing that we've definitely learned the last couple of weeks, the interest level with this industry is alive and well. Is it not, Ben?
Absolutely. It's never going to go away because cannabis,
Yeah.
Rob Seacrest has mentioned a number of times, the equity markets may not be performing, but, the sales and the flow through of money in the industry keeps going higher. So this industry is never going to lose interest despite the morbid price activity in the markets. We just have to get the right, catalysts in place, and it's going to take off.
Yeah, that's for sure. So let's dive into Curaleaf, the multi-state operating cannabis company who reported its Q1 2023 results and beat both on revenue and adjusted EBITDA expectations, with $336.5 million versus the estimate of $332.7 million and $73.2 million EBITDA versus the estimate of $71.3 million, respectively. However, company's still not generating operating cash flow after tax considerations. And once again, the market's, I guess, reflecting that way. So the stock, I guess, hasn't really responded. But what's your take on the overall earnings, the numbers that were produced, Ben? And what's your play on this particular company, both short and long term?
Yeah, everything you said is true. Not quite operational cash flow yet, so that's lagging some of the other operators, such as Verano, which is cash flow positive, 6 out of 9 reporting quarters since going public. But the market liked it. I mean, it was up 7%. Of course, Curaleaf has been beaten down over the past 6-7 quarters. So even though they're not quite there on the free cash flow positive side yet, they're getting there and they're making progresses and advances. And the market liked it and pushed the shares up about 7%. So, there is a lot to like here. They're going in the right direction. They just have to, perform a little bit better to get to that free cash flow positive metric. I think that's the big thing that investors will look for next. And of course, they had, some positive news about gearing up for Germany. And I'm sure Anthony will talk about that next. But there is a lot to like in this report.
Yeah, a lot of highlighted numbers, Anthony, but some of the stuff that was outlined was like record-breaking quarters in Arizona, but the one that actually caught your attention was the announcement pertaining to Germany. You want to outline that?
Yeah, I mean, there was a lot to like from a quantitative standpoint from the earnings report. The only thing that really stuck out to me was they're a little light on cash with $115 million, but I'm sure Boris will figure that out sooner rather than later. But, I mean, the fundamental story is shaping up quite nice for Curaleaf. Arizona's singing, Florida's looking at rec, and then they have this European announcement. I've always liked Curaleaf because of the international exposure. They acquired that EMAC asset, which I thought was a very smart acquisition by Boris, as that's a true differentiator as far as I'm concerned. None of the other MSOs have any leverage to assets outside of the U.S. Germany is going to be a very large market. They're getting their shit together from a medical and a recreational standpoint, and it's probably going to be the country that sets the precedent for the European cannabis industry as a whole. This is great. Obviously, leverage a Canadian LP to export into the country of Germany. Boris came out and said that it's going to be a private LP because everybody
I
at
found
a
that
moment's
interesting
notice was
too.
speculating. Yeah, everyone was speculating on who it was going to be. My guess was going to be Tilray, Organigram, or Aurora, who all have expertise in growing quality flower, with the exception of Aurora, and have experience of importing or exporting to Germany. But that's the icing on the cake for me. I mean, with that announcement, Curaleaf is on the top of my shopping list right now as far as cannabis stocks go. If and when I decide to come back into the sector.
Now, it's worth noting
Wow.
that
So you feel that-
on the cash side, it could be a little light because they had the Bloom notes, if you recall, due January 2023. So I believe that was a $50 million note payment. So that might have reflected in the cash. I forgot to do the comparison versus the sequential quarter in Q4 2022. But if they are light on the cash side, it could have came from that note that was due to be repaid.
Okay. You guys surprised at all that more companies, especially multi-state operators, have not had a more aggressive plan in the European? Yes, Europe has moved slow, but Germany has indicated that they're going full-on rec at some point this year. Why only Curaleaf? Go ahead, Anthony.
I would have to allude to Boris Jordan. I mean, Boris has made his money in international markets. He's made his money in emerging markets. He understands the European Union, probably not only from a business perspective, but also a cultural perspective. And I mean, I can't really name another cannabis executive that comes from abroad that's leading one of the companies in the U.S. I mean, everybody's homegrown from my standpoint. I don't think it's going to be easy to operate in the EU. I don't think it's going to be easy to have the foresight to go into the EU while you're still trying to streamline and optimize your domestic operations. I don't think it's for the faint of heart, and I mean, I don't think it's going to be a trend that you're going to see other MSOs follow suit. I think if anywhere, you see MSOs maybe go into the Canadian market sooner rather than later, the Mexican market once it gets its shit together, and then maybe the Caribbean. But I don't see European operations being a trend for major MSOs moving forward.
You guys think that multi-state operating U.S. cannabis companies will enter into the Canadian market? You think that?
I mean,
I
you're
don't
seeing
think
brands
that.
already. Binsk, Binsk have operations up there in the edibles market. There's a bunch of other Canadian or U.S. brands that are coming up there. I'm not saying it's going to be some trend, and I'm not saying that I would recommend it to other MSOs. But I mean, if GTI gets larger, no. But I mean, if GTI gets large enough, and you see institutional capital flow in, and they want to go over to Europe, I'm going to go buy Aurora. I'm going to go buy Organigram, because those companies are eventually going to fail, and you'll probably be able to pick them up at a discount. I think there are some valuable assets in Canada. I still think that there is a consumer base in Canada, and it would behoove U.S. companies to want to have some sort of exposure up there sooner or later.
Fire away, Ben.
I personally, I don't see it. Maybe to the introduction of brands, some sort of partnerships. We've seen Slang operate up here, and a couple other companies. The brands that Anthony mentioned. Usually, companies don't tend to buy other companies unless they are accretive to the balance sheet, and most of the LPs up here are money losing. So until that turns around, I wouldn't expect to see a lot of M&A here. In terms of Germany, that too, I would caution that investors should sort of temper their expectations there, because of there's a cannabis light rollout there. There was some anticipation that it would be more liberalized at the beginning, but it looks like it's going to be a slower rollout. So I don't anticipate this being a huge moneymaker it's going to be a money loser for Curaleaf for several quarters before it really gets going. And we'll see what happens in 2024. But they are laying the groundwork here, and it is exciting. They are partnering up with an LP or I guess a Privco, right, which is going to provide them some of their flower, but they are sending a nice building base, but don't expect a lot of movement on the balance sheet in the near term.
Yeah. All right. Let's switch to Washington. Since our last podcast, it was announced a coalition of cannabis advocacy groups are asking that a bipartisan banking bill be expanded to include provisions ensuring businesses have access to forms of financial services, including stock exchange listings. Don Murphy, lobbyist, commented saying, "Hogs get fat, pigs get slaughtered." What are we doing here? Are they sabotaging the bill, Anthony? Meaning, are they asking for too much right now?
It's self-sabotage. Don't ask for anything else.
Yeah.
Go forward with what's on the table. Like we've said, incremental is going to get this done. Not asking for too much and taking steps is going to get this bill passed. Right now, asking for that kind of language to be input, and then you're going to have to redo the entire process as well as get everybody on board. The passing of SAFE can lead to ultimate rescheduling and descheduling, which, if done, will grant access to those senior major exchanges. There's no need to put this in at the 12th hour and try to augment the bill. I say put it forth as it stands and just let's get it done.
You wonder what the thinking is behind all this. Like, we put out a tweet earlier this week, you'd mentioned, Ben, in our last podcast. SAFE was introduced 10 years ago, and this is the reasons why. Little things like this, right?
Well, I mean, you have to remember, these are just advocacy groups and banking lobbies pushing for it. It doesn't mean it's going to get into the final bill. It likely won't, if I'm reading the tea leaves correctly. But just lobby groups pushing for it. I wouldn't read too much into it. I would assume, as an investor, that this will not be in the final language. I don't even know. So in a way, it almost seems like a waste of time because Congress is focused more on the social justice issues, and it just seems like you're kind of pushing the envelope. I just want to see something get through. I just want to see incremental progress. And I'm sort of discounting the story. I'm not really expecting much of it. I don't think it's going to make the final bill. But if it does, I'll be happily surprised. And Anthony is correct. If we go to Schedule 3, that is the big unlock anyway, right? So in a way, I don't even care too much about safe banking. I want to see what Becerra says at this point. I'm sort of a little bit beyond that. Although safe banking, if it can unlock credit card and reduce the cost of capital, then it's going to be a big win as well.
So is that the big takeaway for our viewers? Like, what they should be watching and listening for? Next steps is the Becerra with rescheduling.
I think so. I think both are. Like I said, if safe banking actually does unlock the credit card companies and it will reduce the cost of capital, I think that in itself is a meaningful step. But I think ultimately the big one is Becerra because that's going to unlock further reform down the road, and of course the 280E requirement. You're improving the earnings quality of all these companies right now. You're going to put more companies in a cash flow positive position and a net income positive position, and it's going to be there'll be a lot healthier balance sheets going forward if 280E is no longer on the table.
100%. Utah. Love that movie. All right, let's switch now to AI, and the name everyone's talking about is ChatGPT, which is now live and online. GPT-4, said that right, is now fully online and in beta, allowing users access to data in real time, and that didn't take long. This is basically completely transforming the way users are now engaging, and the media cycle networks like CNBC are AI. So you are very familiar with the platform itself, Anthony. What's this now do? Like this just advanced it to a whole new level overnight.
Oh yeah, it's great. I mean, you can now actually put in your website into prompts and ask ChatGPT to, let's say, create a top of the funnel email for my business based on our value proposition, put in the URL, and then it spits out a full email with all the information from your website in real time. This morning, just messing around with it, I prompted it to create a table based on the top 10 analyst price targets on NVIDIA. Create a table with the top 10 analyst price targets on Alibaba. It did it. You can see where it's actually getting the information from in real time as it's clicking the links, reading the copy, and generating the table. And then it spits out the info. It did this in about 60 seconds for each table that I did. That being said, I've been messing with it further, and I've been asking it, for instance, to generate or write a report comparing Foot Locker and Target's most recent earnings report commentary as it relates to organized theft around the decrease in revenue around its earnings. It stumbled doing that. The live internet features are in beta, so I'm assuming the model is going to get a lot stronger as it goes. But it's pretty damn powerful thus far compared to what I've used with Bard.
I actually typed in this morning. Share with me like the latest news involving the safe banking bill. It timed out. Like, why would something like that actually not register? You would think that would be pretty generic.
It's beta. I mean, from what I'm seeing, like getting detailed stuff and getting like aggregate answers to things, it's been tripping up on. They just rolled this out yesterday. I would have to guess by this time next week, it'll probably be steps, leaps and bounds, orders of magnitude better. And it's going to learn as it gets used. I mean, right now the internet feature is only available to GPT Plus users. So I'm assuming the input is also throttled down, as I don't think a lot of people are paying for it right now. But I'm going to keep using it probably every day, every morning, and kind of just retesting what it's doing and how it's evolving.
Question for you,
But
Anthony.
It's very powerful nonetheless thus far.
Question for you, Anthony. I know you've tried Google Bard, and obviously you've tried ChatGPT. So can you do a comparison? Which one do you like better? Which one spits out better information in your experience?
GPT versus Bard. I definitely prefer GPT. Just being that I can interact with it better, it's more reliable, I feel, and the information that's come out is more formal versus Bard. And I like the user interface for GPT much more than Bard. But up until yesterday, Bard was the only one that was connected live to the internet.
If you're 22, 23 years old, you're on a university right now, what do you think that you need to focus on over the next 5 years if you're starting a career and with the emergence of AI? Like where would your focus be if you could turn back the clock 15 years as to where the world is today and you're finishing up school?
So I think about it like this: whether you're in finance, whether you're in wealth management, whether you're in marketing, whether you are in computer sciences, you can use ChatGPT right now to enhance your daily workflow and even check yourself on your work without having to have someone else do it. And it's going to cut down on the time. Last week, I was testing ChatGPT out. In 2 hours, I made an entire marketing plan for a business, created an entire email funnel, created an entire content plan, staggered out in 90 days with platforms and best practices, created a KPI set, then created spreadsheets on how to track the KPIs against all of the content. This would have taken me and somebody else 4 or 5 days probably to do before. I did it in 2 hours. Yeah. If I'm a marketing professional now, I'm learning. Like I could probably right now, I actually wanted to do this and see what it was like. Go on Upwork, create a profile as like a marketing consultant and creating marketing plans and copy for like people at people that don't know how, and just using ChatGPT and see if it actually works. Because I'm pretty sure that you could do that. That being said, like creating the full email marketing and all of the funnels, like the copy was great, but you still need to add like a human or like personal touch, but it gives you the entire skeleton right off the bat, which is basically all of the time because you know the particulars that you can plug into it and enhance it. Yeah.
You got to have a very sophisticated strategy as to what you're Go. I was going to say you got to have a sophisticated strategy going in to understand what you want, what you're getting out of it, to make it more effective.
Yeah, and I mean you can use GPT-4 to audit code. You can use it to audit smart contracts. You can use it to do a lot of things. I mean, especially if you're an attorney now, you really don't need a paralegal. You can look up anything you want just like that. You can draft a memo and have GPT-4 review the entire memo, tweak the language, cross-reference it against other statutes and laws. It turbocharges what you're doing, especially if you're a thought leader in your respective space.
Yeah. Cue the impending doom conversations. I see it everywhere right now about the emergence of AI, but it's here. How it's going to look, I think that's the next step. But, I do think there's going to be a lot of job creation around regulation and some of the stuff that needs to be developed to figure out what's real and what's AI automated. But world, man, is changing so fast, so fast. Let's focus on consumer trends this week. Walmart, Target, Home Depot, and Foot Locker reported earnings and wasn't good, especially for Home Depot, who reported their slowest growth since I think it was since 2002, if I'm correct, Ben. And their CEO reported modest growth for the foreseeable future. So, based off of that, what's this say about the economy as a whole? Are these indicators, I guess, that we're headed towards a deeper recession?
Yeah, I think it does point to that potentially. It's sort of unclear right now. I think from the earnings season that we've seen, the consumer discretionary has been a little bit more hit and miss. We've seen bad earnings reports or guidance from Expedia, for example, and Home Depot, which was not good. The biggest miss since 2002 on the revenue side. But if you look at consumer staples, Amazon, food sellers, Kroger, like those have been doing very well. And even Loblaws up here in Canada, biggest grocery chain here. It's, I mean, the earnings have been gangbuster, and those stocks are trading near all-time highs. So, I mean,
yeah,
discretionary is where you're going to tell where the economy is going because consumers don't have to spend on those items. Those are not must-have items, but on the must-haves, those corporations, Costco's, etc., are doing really well.
Yeah. It appears that inflation is alive and well when it comes to a lot of these reports with regards to Home Depot. Would you not think, Anthony?
Yeah, I mean it's very insightful. It's also kind of eye-opening at the same time. I mean, you've got someone like Foot Locker that's down 30% right now on the day. And I mean, they cited in their earnings that there's organized theft going on around their locations in certain jurisdictions. 50% of their consumers are considered low-income consumers if you're looking at it on an earnings basis. And I mean, discretionary looks like it's drying up for the bottom of the spectrum. That being said, Burberry, LVMH, Porsche, Ferrari, I mean, they're hitting records in sales. They can't maintain the supply for the demand of their product. So I mean, to get more, I guess, into the socioeconomic nature of it. Yeah, of course it is. When Porsche and Ferrari and LVMH are setting records, yet Foot Locker that's selling $80 Nikes is having trouble, and they're down 30% on the day. That's a very big problem. I'd much rather the companies be in better health that are selling people $50 and $80 pairs of shoes versus $300,000 cars. It's a widening wealth gap. It's got to do a lot with the way that I guess society's been engineered, and I don't think it's going to change anytime soon. I really don't. I hope that the general health of the consumer at the bottom of the spectrum starts to get under control, but that's not going to get under control until inflation gets in check. I mean, my grocery bill has doubled over the past 2 years. Do I feel it? No. I mean, I'm fucking lucky that I can afford it. It's not hitting me in any other places. But some of the products that I buy, like I buy this bag of mixed berries every week that I put in my shakes every morning. That was $9.99 before COVID. It's $18.50 right now in Whole Foods. Like, that's crazy. Like the yogurts, everything that I buy has gone up in price.
Yeah, I totally agree. I'm seeing it too. My grocery bill, I don't know if it's doubled, but it's gone up probably 60-70%. It's everywhere. Like it's lettuce, and it's also like shrinkage in packages, right? Like we've talked before. I used to get 3 heads of lettuce in one package coming out of California, where a lot of the produce comes, and now it's 2, and the price has doubled. So you're seeing a lot of substitution. Mm-hmm. You're seeing a few grams every quarter or so going down on the cereal box, on the Shreddies or whatnot for the kids, right? It used to be 500 grams. Now it's 450 and so forth. So, I mean, it's definitely, I feel bad for the lower end of the spectrum. I feel bad for, just working class people with families. It's getting real. It's a real tough environment to operate, right? Like it's.
How do we see that? How do we see this playing out then? Like, if you say it's not going to change the foreseeable future, then what's the ramifications to this over the next couple of years?
You're seeing it right now. You're part of the where you're seeing it is
I know
they're
we're
getting
seeing it now,
ransacked.
but if
Walmart's getting ransacked. Foot Locker's getting ransacked. Some of these companies in like
Yeah.
blue cities are getting, especially where there's a lot of working class poor people are closing down. And I think you're going to see a bigger, that trend continue as long as inflation remains high and as long as the wealth disparity, which has been going on for like at least since the early 80s or late 70s, continues to rise. And unfortunately, the Fed has been unable to institute policies that have equalized wealth distribution.
printing money.
Yeah,
Printing money.
I completely agree with Ben. And I don't see it going away anytime soon. Because when you look at it, what has inflation hit probably the hardest? Fuel, autos, food, insurance. Those are all things that consumers at the bottom of the spectrum or at the top of the spectrum, they can keep going. But those consumers, whether they like it or not, those people have to buy those. You have to have insurance. Mm-hmm. You need a car. You need food. You need gasoline. And now they cannot buy shoes. They can't buy clothing. They can't buy a new TV because their paycheck has not risen with the cost of with the rise in inflation, and their dollar is going way, way, way less than it was before COVID.
And you got to remember too,
I got a podcast.
Oh, sorry. I was just going to add, you got to remember the policies too have been, it's not just the Fed and printing money, it's also our governments, right? With energy policy, it's the carbon taxes that they're instituting. It's the shutting down of oil pipelines and all that. So the energy complex has gone way higher, and transportation costs are always built into the goods that you buy. So it's, it's a combination of the Fed printing money, inflation, and also government policies, which are, leading to rising prices, which are hurting the working class the most.
I've got a podcast coming up this week. I actually interviewed this guy earlier this week. It's coming out later this week, but it's a lithium play. And I learned a lot about this particular podcast. But one company that you were mentioning about to me last week, Patriot Battery Metals, I think that's the proper name, Ben. This was a $20 million market cap company and is now at $1.6 billion. They're in this region in Quebec. And some of the conversations I had with this company is that their construction site is only going to be 2 miles away from where this company is set up shop, and explaining to me and educating to me all the government mandates where cobalt's going to be gone. You're not going to be getting cobalt from countries like Indonesia and stuff like that, and how this Quebec region in Canada could be this global destination for a lithium play and how these government mandates are taking place. But I wanted to bring that to your attention because you mentioned to me that you're watching that chart earlier this week, only to learn later on that this was at one time a $20 million market cap company and now at $1.6 billion. So if you pick the right horse, lithium's alive and well.
Yeah, it's been an amazing run for Patriot Battery Metals.
I see Anthony going like this. Go ahead, Ben.
It's just been a phenomenal run for this company. I mean, it's been what a 30, 40xer if you hung on. And the thing is that they produced assay results earlier this year, which made the stock run from like $6 to all the way to 18. It was like almost 200% run in the matter of a few days, and those results were off the charts. They were gangbuster results. And I'm not. I don't specialize in the mining industry, but I know enough to how to read assay results, and they were gangbusters to the point where that James Bay region in Quebec that I think you're alluding to could be one of the preeminent regions in the world to produce lithium, right up there with like some of the areas in Chile and things like that. So they got a really good property there, and that bodes well for other plays that are close to the areas that they're sourcing, because obviously people play parallel plays, and that's what happens in the junior mining industry all the time.
Okay, I see a smirk on Mr. Smarty Pants over there.
I was smirking because I'm pissed I didn't buy the stock. Just thinking about the returns. I think, as far as I'm concerned, investing in mining is not my forte. But I damn sure would like to learn how to evaluate companies, because cobalt, nickel, lithium, copper, gold, the demand's not going down. The demand's just going to keep going up. Those are inputs that are going into everything that's chip related, that's
Well, there's a
technologically
huge-
driven. Yeah, huge. But to think about an
There's a
investment
huge
going
demand.
from 20 million, yeah, thinking about an investment going from 20 million to 1.5 million, 1.5 billion usually puts a smile on my face.
Yeah.
Yeah.
Well,
I
some of
mean,
the
and
feedback
also
is that
not a lot of people.
hu-
So not a lot of people talked about this, but one of Elon's points from the investor day for Tesla, he's actually doing a third-party audit on their entire supply chain as it relates to cobalt to ensure that there's no child slavery, there's no indentured servitude or slavery in general going on at any of their mines or any of their supply chain on a global basis. Not saying that would even ever occur in Canada. It's mostly their African mines and their African suppliers. But he's third-party auditing the entire thing to basically sign off on it that it is above board.
Well, that's one of the things that this CEO brought up was ESG compliant. There is a huge interest amongst new investors when it comes to that. But what I learned most importantly is that a huge demand for lithium and a huge undersupply of it right now as well. Corporations are breathing down a lot of these companies' necks and want to get involved. But a lot of these junior mining companies are saying, not yet. Why not? Like, we've all seen The Social Network. Don't sell Victoria's Secrets for $4 million because a couple years later it was valued at $1 billion. But it really opened up my eyes to a sector that I don't really pay much attention to. But something I think our viewers here watching this, that'll be coming out this week. But I think you'll find the conversation interesting. But anyway, happy long weekend in Canada for Mr. Ben.
Oh, nice.
Enjoy the long weekend. Anthony, you'll have that coming up next week. But you guys enjoy the rest of your weekend. Enjoy this weather. And I'm going to get some rest because I was up till about 2:30 last night watching Game 1 of that Eastern Conference Finals. And wow, what a great hockey game between the Panthers and Canes. That was a great game.
I mean, yeah, Bob looked like the Terminator in net. I think he had 68 saves throughout the entire game.
Yeah.
But yeah, go Heat, go Cats. We got Game 2 tonight against the Celtics, and then I'll be at Game 3 on Sunday.
Yeah. Jamal Murray looked like he was tossing bricks too. 23 points the fourth quarter. Nuggets take it. They're winning that series. Denver's real.
I hate the
Denver's
Nuggets. I hate the Nuggets. I fucking hate the Nuggets. I don't.
Ben,
I hate
have
the
a good
Nuggets.
weekend. Anthony, have a good weekend. We'll check in with you guys next week.
You too.
He hates the Nuggets.
Talk next week.
Take care, everyone. Hey, everyone. Thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.